unpack these movements now with Martin Smith, who's a portfolio manager at eNCA Capital. Martin, as always, thank you very much for your time this afternoon. So let's start with that global picture that we've been talking about for the better part of the last few days, the impact of Omicron, as well as what's happening in the UK. Some good news, though, the UK lifting South Africa off that red list, that breaking news coming out at the top of this hour. Your thoughts on all of that and how they've had an impact on sentiment, especially as we look ahead to the inflation outcomes that are set to be coming out on Thursday from the United States?
Yeah, so I think there's just a lot going on at this moment in time. If we look at kind of the global risk sentiment picture, I think we're definitely experiencing a proper risk off kind of picture. If you look at what's happening, like you said, with the variants, and I think what's happening on the ground in South Africa is a little bit different to kind of the narrative that's being painted overseas. Obviously, there's a massive outcry around the red list and all of that. But if you look at what the numbers and the death rates and the like in South Africa versus kind of the panic that's kind of happening offshore, it seems to be a little bit of a disconnect. I mean, I don't know if you saw Boris Johnson's comments yesterday coming out, but I think all eyes are on that as well as what the Fed is going to do tomorrow. I mean, you had that CPI number out of the States last week, which is the highest in 39 years. So you've got that, you've got the variance, and you've also got the property sector rearing its head a little bit in China, with Evergrande kind of taking center stage there. So a lot on the go, and I think rightfully a little bit of risk off at the moment.
Right, and let's talk about, on the local front, the Rand, that performance there, really struggling over the last few days. We did see a little bit of a positive streak, but then late, of course, yesterday we saw it fall back to over 16 Rand against the US dollar. I mean, your thoughts on the Rand's performance and the catalysts that are shifting it around the way that it has been?
Yeah, so I mean, again, I think people kind of get caught up in South Africa type of risk and think about what the Rand is doing, but largely it's a function of, A, what is the dollar doing? And we've seen a much stronger dollar over the last, call it 4 to 6 weeks, as well as, secondly, emerging markets and kind of risk appetite. And you've had risk appetite kind of fall off the cliff in the last little while and a stronger dollar. So it's no surprise to me that you've seen the Rand kind of trading where it's at now. I still think fundamentally it is kind of undervalued. I'm hoping to see it around the kind of 15 to 15.50 level. I think that's kind of fair value, but risk sentiment can drag it lower for longer. So probably hovering around these levels until we get a little bit more or a little bit of a better picture around the new variant and also what the Fed is going to do, as well as the ECB and BOE later this week.
Right. This came through from Sally yesterday. She was wondering, Martin, about the fact that the president having COVID-19 having an impact on sentiment. Could those be one of the risks, the fact that the president has got COVID and we might have to take stricter measures to prevent the spread of the virus during the festive season?
So I think he's one of many people in South Africa that has this virus. I know so many people personally, like anecdotally, who have it at the moment. So no surprise that someone kind of in a big position has it. Whether or not him personally having it affects what he's going to do for the rest of the country, I don't know. But it is something that is making me a little nervous. And I think it is a day-by-day kind of story that we need to follow. Obviously, number of cases is a leading indicator. So I think this week and next week are going to be absolutely key in determining what we're going to see out of the president and out of kind of the government with regards to restrictions and lockdowns. Because our numbers have surged at the moment, death rates and kind of ICU and hospitalization seems to be relatively low. But again, we've got leading indicators. Let's see, the next week or two is going to be very, very key to see what our New Year's and Christmas plans are going to look like.
Absolutely. Let's move on to some company news now. Liberty 2 Degrees saying that the turnover and foot traffic have improved across its malls. That's definitely some good news for a sector that was deeply hurt at the peak of the pandemic when it broke through last year.
No, absolutely. And for some context for the viewers at home, I mean, assets of this business include Sandton City and Eastgate Mall, which are two huge malls, obviously. So they've got really good insight into kind of the consumer in South Africa. And two things that kind of strike strike me here is one that seems like South Africans aren't really scared of going to shopping centres and malls, which again kind of paints a different picture for this virus and this variant for us on the ground who are actually seeing it and seeing the effects of it versus, again, the kind of global rhetoric. And the other one is that the consumer in South Africa seems to be in good shape or relatively good shape, which is obviously positive from a GDP perspective. So that's all positive. I don't know if you saw the news about Christo Visa buying 400 million rands worth of ShopRite futures this week as well, which again paints a really good picture for where the consumer is at. So I think all very, very positive, and long may it continue, I guess.
No, absolutely. Final one from you, Hulaman. They released an update today. I mean, they did say the uncertainty between now and the finalization of its financial results for the year is going to hinder them from providing a tighter range of the level that shareholders can expect to see when it comes to that income. Your thoughts on that statement and really just the trading environment that they've been operating in?
Sure. So, I mean, Hulaman are in the aluminium side of things. Their numbers were, I think they expected a loss of about 71 cents for the full year versus a loss of 91 odd cents the year before. So not a massive improvement. Obviously, what people were not really obviously expecting a little bit better than that. But I think the big thing with this business is you saw them release a cautionary and a renewal of their cautionary about 2 months ago. And you saw the share price bounce almost 100% on the back of that news. I think people were speculating about a potential takeover or delisting or something of that nature, which is not uncommon in the JSE at this moment in time. So I think the story there at the moment is more on corporate action as opposed to kind of underlying earnings momentum.
No, absolutely. Martin Smith, as always, thank you very much for your time this afternoon. He's been giving us a wrap of how your markets performed today and saying it probably doesn't really matter that the president has COVID. There are bigger things to worry about.